Yeah. Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, March the 25th. The year's 2024. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes. Your results may differ from mine and differ from Walmal's. And just a friendly reminder, we're going into the last trading week of the month. Always have your risk management in place. Never lose more than you're willing to lose on any one single trade. So looking at the weekly, right now we're 50 pips above the weekly open, about 3.5 pips off the high and 52 off the low. And looking at the dashboard, all the weekly open gaps have filled. If we zoom out to the monthly, we are 20 pips above the monthly open, 249 off the high and 70 off of the low. We're putting in the opening range for the week, and we are inside the opening range for the year and inside the opening range for the month. So we'll have to see if we can break out this opening range. And just so you know, price is in the launch pad. It's now at 44. So it looks like we might have some launch pad action. For the year, though, the price is 76 pips below that yearly open. We are 250 off the yearly high and 125 off the yearly low. And inside bar action, okay, today we crossed the low of the monthly inside bar from 2 months ago. We crossed it to the north. We're now about 47 pips above it. And looking at the dashboard, it looks like there's plenty of inside bar action to be had. We're still below the weekly inside bar from 2 weeks ago and the daily inside bar from 8 days ago. The day so far, I don't see any pairs with more than 100 pips in range, and the pound yen looks like it's leading it with 97 pips of range. Buy zone traders, looks like you had a couple of entries a few hours ago, and we are like I said, back to the launch pad now, only a little over 2 pips off the high, but price looks like it wants to go up from here. Red rats, we're in that red rat zone with the range of 55.9, so look for a reversal. It's like if you're looking at the 15-minute chart here, we've got, let's see, flip, flop, flip, flop, flip, flop. Price is just flip-flopping. It looks like it's establishing a range from around, let's call it 126.36 on the bottom side to about 126.45 on the top side. If you like trading those ranges. Looking at the pivot chart here, we can see Bambino Flex indicator said to go short, but shorts paid off a couple of times. And bias near the pivot is short. Bias near R1 is short. We're R1, we've got 26.57. We're approaching that. So maybe it'd be time to short. If you look at H4, we're now above that one return bar. We got a couple other return bars sitting up much higher. We'll have to see what price does. But we have taken out the daily pivot. We still haven't quite hit the weekly pivot, which is 126.58. And we've already taken out the monthly pivot. And the current H4 pivot we haven't taken out, down at 126.08, and there's a missed H4 pivot from H4 bars ago at 126.58. So we'll see if we take out one of those pivots. Okay, in and out of that lower wick zone. That would have definitely been a nice trade because the lower wick zone was just about a little over a pip under the 126.00 psychological line. So anybody trading the wick zone or the psych lines, you should be sitting very nice if you're still in that trade. As I mentioned, we've got a weekly range or daily range. It's the same right now, 56 pips. We haven't broken out of the high or the low of the previous week. Walmal, how's trading?
Today was a pretty good day. I did not take a loss like I did last Friday, so I can't complain. I've made all my pips. I mean, we only have a 61 pip range for the day. I know you've already said that, but it just shows you that which I needed to go make about 20 pips. I needed to make 15 pips, and I made 20, I think 20, 21 pips, something like that. So it was a relatively easy day. I don't have any losses today. That's always a good thing. I do have one trade where I made a whopping 3 points, but I didn't take any losses, so I really can't complain.
That sounds like did you average in on that trade just to let the traders know?
No, I did not. What happened was I just got into the trade and I sat there for about 20 minutes, and it would go up a pip, go down a pip, go up a pip, go down a pip. So when I went up a pip, I went and said, I'm out of here. And I bounced out of the trade. And then, of course, I was actually up like a pip and a half, and got out with only 3 points. And then, of course, I turned around. If I would have stayed, I would have made 3 pips on it. But, that's trading. But I think I said this last week or maybe the week before. I have time limits on trades. And at some point, I just say, okay, I'm out of here. Because the reason I got into the trade doesn't exist anymore. So I'm gone. I'll wait for the next setup. And, that way, why am I putting myself through stress? I don't see a reason for that. One of the things I was going to go and mention, I don't know if there's anybody out there that goes and does any type of fib trading, but I had drawn a fib line out there a long time ago, back in, if you remember, back like in August or something like that. And the interesting thing is that I just went and put that set of fibs back up there. And right now where we're battling, and we've been battling this line now of 2645 to 2650 for a long time, all the way back into December, in fact, back and forth. We keep on crossing each side of it. Well, that happens to be the 38.2 retracement off the top, and that just tells me that, there's something going on here right now. The market doesn't know which direction to go in, but the fib lines are holding, pretty strongly on that line, and it shows you that, I don't know if I'm, I don't necessarily trade off of fib lines, but I like to keep them in mind because there's enough people out there that look at them, and if enough people look at it, then it's going to cause a disturbance in the atmosphere, so to speak. Things are going to happen around there, and we can see that by just going and looking at a daily chart, and you see that it's crossing that line back and forth from as far back actually as the 7th of December. Like just back and forth across it. It runs up above it and then it comes right back down. Or runs below it, comes right back up. So it's just an interesting thing to keep in mind.
I'm curious, what's the high and the low? Do you have that on the chart for where you drew your fibs?
Yeah, my original one, the low was at 1.03 roughly.
Okay.
So $1.03.
Right.
But I moved it all the way up to $1.18. And the reason why is because it ran all the way up above it and came back down and tested that $1.18 level for a couple of days. And so I moved it up, and then my high on it is sitting at $1.31 roughly.
Okay, yeah, because I've got my auto fibs. I just pulled up the monthly chart. I've got a low of 103.58 and a high of 142.47. And it's like you said, though, on mine, it's oscillating right around the, I guess that's the 38 retrace off of the top, which is on my
Yes.
chart, it's at 127.61.
Yeah.
And has
Yeah.
been,
Mine is
yeah,
lower. Yeah. Mine is lower than yours only because I moved my bottom up.
right.
But, it just shows you that for whatever reason, those lines, they hold some importance. I don't know what it is, but they hold some type of importance. And as traders, if we know something holds importance, I'm not saying that's a reason to take a trade. And all I'm saying is that it's a reason to pay attention. It's sort of like, it's sort of like you're driving down the road in your car, right? You get to a railroad crossing and, and like around where I live, because I live out in the country, we don't have those gates that go down. What we do is all we have out there is just a cross sign that says crossing. Well, when you get to that railroad track and you see that railroad crossing, you slow down because, and you take a look to left and right because you don't know if a train is coming. It could be coming around the bend and you don't even know it, and well, that's kind of how I treat Fibonacci's. I'm not going to trade off of it. It's not a reason to get into a trade. It's not a reason to get out of a trade, but it is a reason to pay attention that other traders out there are paying attention to this line. It's sort of like psych levels. I treat it the same way, a double O or a 25, 50, or 75. Those levels, they hold a lot of significance to a lot of traders. And if I recall correctly, you used to trade the double O a lot, and you just have to pay attention to it. Even though that may not be your method of trading, you need to know that, hey, it may not be my method, but other people are using that, and it's going to cause the market to do some things there.
Yeah,
So it's just
yeah, exactly.
So the other thing too is that this week is a very light week in terms of news. However, on Thursday, what comes out is the final GDP. So that's a big news event. There's no news today. There is some red news tomorrow. I think it's consumer confidence. But on Thursday, we got final GDP and unemployment for the week come out at the exact same time. That should be a day that we get a lot of movement in the market. So stay tuned.
Yeah, stay tuned, traders.
Because it's going to move, and it always seems to, even on these light weeks where we don't get a lot of news, we don't cause a direction. Well, there's usually at least one piece of news during the week, and sometimes that one piece of news, because there was nothing else all week, causes some type of unexpected, explosion in one particular direction or another. All of a sudden, the thing is rocketing to the moon, or it's falling off the shelf, and you look at the news and you say, I really didn't, and it was a miss, but it's not a huge miss. Why did you? Well, because there's pent up anxiety, and if you go 3-4 days without a lot of movement because there's no news, and all of a sudden you get a piece of news, and people are sitting there. People get itchy fingers. Even the professionals, they get itchy fingers, and I can't make money if I don't go and trade, right?
Right.
I think that's a wrong way to think, but there are a lot of people who do think that way. I like the Warren Buffett way of looking at it a lot better, and that is that, as long as I'm not losing money, I'm making money. The idea is that I'm not going to jump into a trade I don't need to jump into.
Yeah, for sure. And you know what, traders? The fastest 15 minutes in Trader is over, just about over once again. So I hope everybody had a fun and safe weekend. And thanks again for tuning in and watching. And I know I haven't been putting out videos every day because, like I said, this March, my schedule has just been a mess. So maybe next month things can return to somewhat normal. And so when you come back to your trading platform, whatever it is, computer, phone, smartphone, or even if you still pick up the phone and call your broker, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.